Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, on Tuesday, a surprise or not, after the Reserve Bank of Australia hiked the benchmark cash rate by 25 base points to 4.1 from 3.85%. The RBA Governor Phil Lowe warned it's in Australia's interest to get on top of inflation and to do so before too long, adding the RBA may lift rates again in the coming months to get inflation back to its level around 2 to 3% target. Meanwhile, investors also await the US Federal Reserve rate decision on June the 14th, and the outcome may actually be neutral, as many are viewing, and central bank will keep rates on hold. However, the next major economic release out of the US will be the Consumer Price Report, or the CPI, for May on June the 13th. Looking at the US dollar, which measures the greenback strength against a basket of six major currencies, currently consolidates around 104. So over the last 4 days, the Australian dollar has now managed to tackle and pressure the level around 66.85, which is seen where the 60-day moving average is. Although the market is slightly winning the pace to the upside and its challenge to that level, we may see a rejection due to the overbought indicator from the RSI. And if so, a pullback to 66.40 will be seen as a point, because a break there would give further indication to the downside and look towards 65.70. However, if we do see a close above 66.8085, then this may give further confidence to the bull case and therefore see a rise up towards 67.40 and reassess from there. Another flat session, even though it was relatively whipsawed for the euro as the market looks for direction, and the dollar index still holding, as I mentioned before, at 104. I do feel that there is a little bit more downside pressure coming, and therefore looking towards 106.50 and maybe even to that key point that is seen roughly around 105.80 to 85 and reassess from there. Furthermore, if any return demand comes, we may see good resistance around 107.35 to 80.85. After a rebound on Monday, the market is a little bit weaker Tuesday into Wednesday morning, and as we can see here, the market is now looking back towards the support levels seen at 139.10.15. It is assessed that we could see a bounce from there and look back towards the top side around 139.80 to 140.40. The market for sterling is also a little bit jittery, as recent inflation was still a little bit mixed and investors are remain cautious or somewhat on the sideline, as we still see 124.60 capping. If we see this market continue in this pattern, then we may see another down test and look towards the region of 122.80.95, which does anticipate some demand. Wrapping up with gold and oil, the market is attempting to stage a slightly firmer climb after rebounding in front of that key level around 1,933 to around 1,940. I do feel that there is further down pressure with this engulfing candle, could see the market take the challenge lower, and if we do see a close under 1,928, that would give further indication that the bears are in direction to the region of 1,850 as a broader call. Having filled the gap for oil, the market staged a firm rebound on Tuesday and now still looks towards that key level of $74 a barrel. I do feel that there could be good demand, and if we see any further pullback and wait this move, as the RSI is married up to the MACD and supports the bullish case. Well, that's a wrap for today. Thank you very much for joining me, and as always, look out for the intraday report. I hope you enjoy the great start ahead.